Hello, folks. How would you like to know if the market was about to go up or down? Markets don't always move on fundamentals, they move on emotions. The simplest way to measure that emotion is through the put call ratio. Today, I'm going to show you how to use the put call ratio to spot great buying and selling opportunities. Here are the details. All right, so goes back to Warren Buffett and Charlie Munger. As everyone knows that has seen my prior videos, I have learned a lot from these guys, and there's nothing more true about the stock market than the following: be greedy when others are fearful, and fearful when others are greedy. And in Charlie Munger's words, invert, always invert. The key question is, how do you know when the market is being fearful, and how do you know exactly when the market is being greedy? Okay, that's what today's video is all about. The put call ratio. Definition: a market sentiment indicator of fear and greed that compares the trading volume of put options to call options on stocks. And this was discovered by Martin Zweig, Marty Zweig, back in 1969 when he was doing his PhD work at Michigan State University. Martin Zweig had a really interesting career. He was in academia, was teaching college for a while, and created an investment advisory newsletter that people would subscribe to. And he would use his put call ratio in order to let people know when was a good buying opportunity for stocks and sell opportunity. And so you can think of this put call ratio as an indicator in a way similar to how a thermometer is an indicator of whether or not a patient has a fever or condition. So, what are puts and calls? A put is a bet that the stock market will go down, okay? It's it's security. You have to have a special options account with your brokerage account in order to do puts and calls. You don't have to have that special type of brokerage account in order to use this indicator, but I just want to let you know that the type of people that trade puts and calls, they're basically a leveraged way to bet either against the market or stock, or to get leverage in favor of the stock market, or a stock. A call option is a bet that a stock or security will go up. All right. So the ratio between these things is recorded and is publicly available. And if the put numbers are really, really large compared to the call numbers, then that's an indicator that the market sentiment is low. Okay, that's an indication that there's a lot of fear. Okay, so to invert this, okay, be greedy when others are fearful. This would be an indicator to buy. Okay, and then if the put call ratio is very low, that's an indication that market sentiment is very high, okay, and people are overly optimistic about the market, greed, and so that's an indication that it might be time to sell. So the lesson from this is buy stocks when the put call number is high and sell stocks when the put call number is low. So what are these numbers? Well, you can go do a search for this stands for the Chicago Board of Options Exchange, the CBOE Total Put Call Ratio. and I pulled this chart from their website, micro.me. Basically, the way this works is that if you have a put call ratio that is 1 or higher, that is an extremely bullish signal or indicator to buy. Buy if it's 1 or higher. 0.9, that would be kind of like a medium type of buy type of signal. 0.8 in that range, more of a neutral situation. 0.7 would be kind of a sell signal. And if you ever do see that the put call ratio gets down close to 0.6, and it hasn't hit that in recent history, but if it gets down in that neighborhood, then that would be an indication that it's probably time to sell. Okay. Let's look at this chart and look at some of the points in time over the past, 10 years and see what has been going on. Well, we can see that the blue line, which is the puts call ratio, is has these spikes that go up and periods where it's had little spikes that have gone down. The red line indicates the S&P 500, okay, index. So, for example, this really big spike occurred in the spring of 2020. What was going on in the stock market in the spring of 2020? Well, COVID hit, and that caused a massive wave of fear, okay, over this pandemic spreading across the United States in particular, when it hit the US. And that drove the stock market way down, okay? And as you can see, the put call ratio skyrocketed. Now, leading up to the COVID pandemic, for me personally, with my personal portfolio, I had kind of noticed that the market was really high. It had been climbing. And I start to get, I try to invert what I see happening, in markets. And I started to actually sell my portfolio down a little bit in the months leading up to this event. And so going into the COVID pandemic, I was actually only about 60% invested in the market. And when the market collapsed, then I started to buy big time. And I bought a lot of Microsoft. I bought PayPal. I bought Shopify. I thought these were companies that would benefit from, the movement of people to a more virtual type of lifestyle. And as you can see, when the put call ratio was super high, the market was super low. And in the year or two after that, the stock market was just rip roaring higher and higher. So that was a really good indicator of when to buy. Here we have another peak that occurred. Well, let's look at well, yeah, we'll go to this one. 2023, we have another peak. Stock market had a little dip, and it looks like that was a pretty good buying opportunity because the market rose, pretty strongly after that. We have another peak right here in late 2023, and it looks like the market did, pretty well in the year after that. And then here in about April of 2025, we have another peak of the puts call ratio, pretty strong one. And that was when the Treasury Secretary Bessent announced the scope and the scale of the tariffs that the United States was planning on implementing, and that sent the stock market into a little mini crash, and didn't last very long. But as you can see, that was definitely a good indicator of a great time to buy stocks because the S&P 500 rallied in a very big way, about 30% in the year since then. Okay, so is this a perfect indicator of the market sentiment? The answer is no. You know, we have this period where the puts call ratio was very low for quite some time, and the stock market tended to rise for quite a period of time, quite an extended period of time. Um, and in just a second, I'm going to explain, why we have some exceptions to this puts call ratio as an indicator. Okay. So what are the limitations of the CBOE total puts call ratio? Well, uh, one is that if you have a period of very extreme policy on behalf of the Federal Reserve, that Federal Reserve activity can kind of overpower the value of the puts call ratio. And as I just got done stating, after COVID hit, the Federal Reserve basically telegraphed to the markets that it was going to act as a safety net to the stock market, and it implemented a very, very powerful strategy called quantitative easing, where they were, going doing the open market operations and buying treasury securities and adding to the Fed's balance sheet, and that was pumping money into the banking system, pumping money into the banking system, and that a lot of that money ended up going into the stock market. So in a sense, if the Fed is telegraphing that it's going to act as a safety net to the stock market, the a negative signal from the puts call ratio is not going to be very, very strong indicator. Sometimes large institutional investors, investment banks, etc., they will hedge their index funds and stuff like that just for risk management purposes alone. Has really nothing to do with their perception of what the future of the stock market is going to be. It's just kind of like, okay, they have these models that they like to keep their portfolios in according to, you know, applications of something called the capital asset pricing model. Sometimes a stock will go up even if the market doesn't. Okay. So you might just every once in a while just have, a really unusual event that will occur with a company either up or down. Okay. I mean, who knows? I mean, the market could be rip roaring taking off, and then an individual stock, you might discover that there's, a massive accounting fraud occurring in the company. By the treasurer or something, and that can cause this, the stock to crash even if the market is taking off. But in general, I would say about 90% of the time, the puts call ratio is a very good indicator, especially when you have very, very extreme numbers, like anything that's above a 1 or anything that's below like a 7 on the puts call ratio. Okay. So, I just wanted to share this with everybody. Um, I'm always interested in hearing people's comments. If you think that you have a market indicator or a measurement instrument that is a good way to measure market sentiment, I would really be interested in hearing that in the comments below. And if you know of someone that you think would be interested in this video, uh, please consider sharing it. And if you'd like to get a regular, like updates as to when these types of videos come out, you can subscribe. And I always appreciate it when people like the videos too. So, anyways, this has been Jeff. This is Jeff Whitaker, Top of Funnel. Until next time, everybody, take care.